Hi traders, Francois here. So we're still here at Crypto Fest. I'm here with Dale Russell from More Johannesburg, and he just led a panel that discussed probably one of the most common questions that each and every one of you normally ask me, which is, should I be paying tax on my cryptocurrency? Now, Dale, many retail traders struggle to understand when crypto transactions become taxable. Okay. Based on your experience, what is the most common misunderstanding that you have seen people have about crypto taxation, specifically in South Africa, and how should they correctly approach record keeping of their transactions to be on the right side of the law?
So I think it's a common question that we get is, the misconception is that once it's in the crypto realm, that it becomes non-taxable, right? So, I mean, if you look at the South African Tax Act as itself, even, income from gambling, income from like illegal trade, that is still taxable income, right? So what makes you think that gains from a asset class that's regulated as a financial instrument would be left out? So I think the biggest misconception is, once it gets into the blockchain world, that it becomes, irrelevant to normal tax principles, and forgetting that first principle comes in the same way that it does with crypto. So normally when you buy something for cheaper than you sell it, you're going to get taxed, right? How you get taxed is a different question, and something we were discussing earlier is that, is it a trader? Is it long-term, short-term from a trading perspective versus capital? That's still something that's unclear. But the biggest misconception, I believe, is that it doesn't attract the same laws that it should, and people need to make sure that they keep record, because although it is a blockchain, and the inherent belief behind the keeping record track forever is there, but if you don't take control of your own data, you're liable to prove SARS otherwise. And we've found that the regulator doesn't have a time frame of looking back. So they'll come and they'll look back since 2016 if you haven't declared, and apply all first principle of penalties, interest, and suddenly, people come to us and it's like, rather go to them than them come to you. And applying normal tax principle is kind of your first step, that it is actually taxable.
Absolutely fantastic. And I know, yes, we would all really like to believe that our crypto is not taxable, right? But, given the rapid adoption of crypto, especially by a lot of the institutions that we are seeing here today, do you foresee SARS moving forward with more clearer guidelines on exactly, more specifically adopted to crypto framework that, what is taxable and what's not, and how it should work within the next couple of years? Or, what changes should traders and businesses start preparing for?
So I think to answer your first question is only SARS really knows. We've been saying every year, hopefully this year there'll be more guidance. Hopefully this year, there's definitely more demand letters being placed. There's definitely more attention being put on it. Where there's going to be clear framework, uncertain. I think the onus at the moment on driving the adoption, driving the scale, is for the ecosystem partners to come forward, right? Again, I was saying up there is we forget about normal tax principles and corporate structuring and these types of things. We need to come together with consistent answers before they come with a reactive behavior that makes it unfavorable to the end user. I think the one thing is evident is that it's going to take something like case law to set precedents. I think the argument between the exchange control and Standard Bank that's gone to the High Court at the moment, that the outcome of that will be quite interesting. And until we it gets big enough that something happens for them to be reactive, at this point I can't say if I'll have clear guidance from them or not.
Brilliant. Dale, thank you so much for that additional little bit of clarification. And well, traders, I think the short answer here is pay your tax. And as Dale stated, rather go to SARS than having them come to you. Because once they come to you, they might take a little bit more than just your crypto. So, yep, Until next time, I'll see you guys in the next episode. Thank you so much.